Conference will now be recorded.
All right, good day, everyone. I am Steve Szymanski on behalf of Wealth Foundations Northwest. I'd like to welcome you all to the Weekly Prepper, getting you ready for the trading week of February 23rd. Happy to be here with all of you. If anyone is interested in learning more about membership here or wants to just a free consult or something to figure out what it is we do here with options and that sort of thing, feel free to reach out to me at this email or look at my website. Happy to have you. Also have uh, welcome you any way we can. So, just a quick reminder that your trades are yours, not ours. We don't act as advisors in any way, shape, or form. Trading does, in fact, involve risk. All right. So, we're going to do the weekly prepper now and going to be doing the Trading Lab Empower webinar for members only later this week and doing the usual schedule next week, I do believe, as far as the eye can see. Looking at our seasonality, first and foremost, in midterm election year, it's not supposed to be a great year overall, but this section of the year, late February through March, doesn't look too bad. And so that doesn't mean that the market's going to do exactly what the seasonality chart does, but the midterm election year, this light blue one on the bottom, is the one that we're most interested in following closely, just to see, temper our expectations, especially going into the summer months. Be careful this year in particular. That doesn't mean we get all bared up, because I never believe that we're going to have a severe bear market unless we have severe economic conditions. Could be that we have a pending war going to happen in Iran. That could definitely impact things a little bit. Could impact the price of oil, could impact a number of things. But by all the looks of it, that's probably not going to happen this week. I think that'll probably be a last resort, not a first resort, but we shall see. All right. Last week's news: the everyday stocks continue making highs. The boring Dow stocks, the things in just non-sexy sectors, not the mega cap stocks so much, but just the just the average run-of-the-mill types of stocks. If you were looking at it as an army of generals and soldiers, we're talking about the soldiers here, right? The spies and the Qs are dragging for that reason, because they're largely held up by the mega caps and the weighted sectors, and those that's kind of putting a drag on the overall markets. But that doesn't mean there isn't money to be made by being a good stock picker in this area. Crypto trying to bottom, maybe. Been watching it and not wanting to get long yet, but watching for signs of a bottom. I mean, it's what we call low on the curve. It has been beaten down for sure, and then when it starts to kind of show itself, and that's not always an easy thing to spot. And I've got different indicators and things that I consider when I decide on that. But let me just show you Bitcoin IBIT ETF just as an example of how hard it is to call a bottom, because here you could have maybe called a bottom on this breakout here. This looked really good, and it didn't look like there was a lot of resistance at that point. And yet I laid off, and boom, and so now we're down here, and I'm watching this unbalanced volume indicator too. It got a little bump up, but it is this is this right now it's in a low base, so this is not bullish yet, folks. So don't clamor into crypto just yet. Not feeling it just yet. But and if you're already long crypto, then you've been suffering. Sorry, that's all I can tell you. Not my fault. I didn't tell you to get loaded up on crypto. All right. So SCOTUS did slap down emergency tariffs, and that didn't affect the markets as much as I thought it would. Of course, Trump turned around and said, "Well, I got other ways to do tariffs, and I'm just going to do it." So I think that's why. I think the market understood that I wasn't going to stop him from doing tariffs, just to make it a little bit tougher. And he just responded by doubling down on tariffs. And so we have tariffs, and that hasn't changed. And so the market said, "Hold on." Pan W had a miss, and Walmart guided lower. And so this past week, not as earnings kind of wrap up, earnings season is largely over, but it hasn't. It's kind of gone out a little bit with a whimper. So the performance this past week, market's relatively flat, maybe slightly up. Bitcoin getting beat up, and gold is really acting as is acting pretty strong regardless of what's going on with the market. So it's kind of doing its own thing. As long as GDP growth is growing, and it's growing pretty solidly, and inflation is moderate, I don't expect a big crash. Could be wrong. Could be wrong. Sometimes the markets will just do what they want to do. But over the last, you can see there's a lot of green sectors. Really consumer defensive, energy, healthcare. These have been lagging a little bit lately. Energy, healthcare been lagging a little bit, and so you can see that. But what has risen to the forefront is not technology so much, but some of these other smaller sectors, communications, materials, and things like that. Financials may be showing some signs of life here in the last day or so, but not so much in the last week. A little bit up. So a lot of sectors are up here lately. And here's what the weekly heat map looks like. So you can see that some of these big cap stocks, I think they did all right, but Amazon was up a lot, but Walmart got killed with its bad forward guidance. But you can see there's a lot of green on the screen, but a lot of middling performance. 1%. I mean, basically these big caps are not outperforming the market, or at least not by much. So they're just kind of hanging around at the moment. Avgo is one where I've been kind of trading, and it's starting to maybe show signs that the worst is over for Avgo. But I've been trading that in my other account as a bearish horizontal spread, and that's done well for me doing that. But that trade may be almost over. And so anyway, so look ahead for the week ahead. Still going nowhere, but the economy is still too good for a crash. Seasonality suggests short-term bullish, but a weak summer. Earnings are winding down. Tariff situation having no impact. I don't think the Iranian war is going to happen this coming week. Maybe the next week. Okay, not this coming week, but maybe the next week. I really don't think they want to. I think they want to try to create some kind of deal. Now, if some kind of deal is struck, if the Iranians cry uncle and make some kind of a deal that postpones this war, that could be bullish in the market. So it could be bearish for defense-oriented stocks, defense contractor stocks. Possible market movers. Really, not a lot going on here. Consumer confidence and jobless claims, just ho hum until we get to Friday. So Friday, when we get to core PPI, that's the producer price index. That is could be a little bit of a market mover. Key earnings this week, nothing major. You got Home Depot, maybe Baba, and I'll show you a little bit more in detail as to when those are coming here in a moment. But rating the sectors this coming week. A lot of these smaller, I'm still expecting a lot of these smaller sectors to outperform, and the larger weighted sectors probably remain a little bit weak. So XLK, XLF, XLY, these just happen to be the largest weighted sectors, if you will. By weighted, I mean they make up the largest weight of the overall indexes. So I'm not expecting big upward moves in the SPY and the Qs unless these weighted sectors start to catch a bid here. And if the weighted sectors start to catch a bid, we could break the new highs. I mean, that could change everything. But I'm not feeling it just yet, and so I think we're going to have to keep an eye on that. So here is the earnings for this coming week, and really nothing on Monday. Maybe Domino's if you're into Domino's. Home Depot stands out to me as kind of an interesting one. Workday, maybe. TJ Maxx for a retailer. NVIDIA is the big one. Wow, how did I miss that one? NVIDIA is the biggest earnings this week on Wednesday after the bell. I did get Zoom in there. Did I put NVIDIA in my list? Yeah, it's on my list. Yeah, Home Depot, NVIDIA, Baba, Salesforce. Yep, I got the big ones. All right. So, and then now, but look for that on Wednesday. And NVIDIA is the kind of stock that can be a market mover. That could change everything. So I think the potential is still there in tech. But a big earnings by NVIDIA could help a lot. Get tech turning in the right direction. Semiconductor's been holding up pretty well anyway. So semiconductor in itself has not been a huge drag. And when we look at our portfolio, we're doing extremely well in our portfolio. We're up 39% year to date, over 39%, almost 40% up year to date, being very selective. So you can see we're positioned in gold and semiconductor are our bigger trades, and then we also have a healthcare trade, but it's a spread trade that has probably been not our best performing trade. So I may want to lighten that up or put that one on a short leash. But let's look at each and every one of these. So gold, we're in a position on gold where we can just sit on this trade all the way till March if we wanted to. I don't know if I want to, but let's take a peek at GLD just so we can get a read on this particular market here. So GLD is the ETF for gold. Getting a little bit of hesitation here. There we go. And doesn't that chart look good? I mean, if you were not in it, I would get in it. Okay. And so we've been doing this as a bull call spread. I might want to get long in a new trade here, or maybe adjust the old one. We're short the 450 here, so as long as it stays above 450, our old trade's going to be profitable. What I might do, I might be willing to roll that short up near here 500 or so, give it some more upward room to run. If I'm inclined to put more money into the trade, I could just adjust the existing one. And so as you can see, we're already up almost $3,000 on this trade, and we got more to come just sitting on what we have. Okay. But if I rolled this up $50, I could reinvest that money that we made and roll this up $50 and give us a chance to make more. But I don't know if that's smart. Maybe it'd be better to put on a new trade instead, one that goes out a little further and gives it more time for it to make that move, the next move. So maybe we look at that, because we'll just leave this, maybe I'll just close this old one and put on a new trade. Let's go fresh eyes approach. I don't want to be overweighted in gold too much, but if I were to take a fresh eyes approach, I'm going to close the old one. All right, we'll just sell the old one, take the profits, and then I'm going to put on a new gold trade. I'm going to consider it a new trade rather than trying to tweak the old trade. Why don't we just get rid of the old one and put on the trade that we really want? And what I think I really want is more of a horizontal spread with more upside, and remain flexible. Or I could put on a new bull call spread that's centered around April maybe instead of March, and give it a little more time to make its journey up to 500 or so if it's going to go there, right? So let's go ahead and take this at the mid. We'll go ahead and take profit here. Beautiful, beautiful, luscious profit at the mid. And then this will allow me to kind of assess what I see in the pre-market tomorrow as well. So I could put an initial trade on for gold. I just didn't want to get too overweighted in gold by having two trades on at once. So I'm going to have to monitor this in the morning, try to get filled on the old. But what I'm thinking is maybe even go out to May. And I could do this maybe as a calendar, right? Maybe buy the 500 calls, keep this trade kind of cheap, buy the 500 and just sell against it. Now that's pretty far out of the money. That may not be the smartest way to go. Maybe buy a little closer to the money. Maybe we'll buy the 470-ish and or 480. Let's go 480. We'll spend a little bit more, just get one contract. All right. So buy the May 480 and then just sell real short term. Okay. Let's just go out to say Friday, and I'm going to sell wherever I can see any kind of potential resistance. And I really don't see any till way up here, so I'm just going to sort of making it. I think I'll just do a 480 calendar. All right, that'll give it good $12 of room to run this week. Okay, and then I'll just remain flexible. Okay, so this is an ascending triangle that just broke. See this ascending triangle pattern? looks like a triangle, and it looks like it keeps knocking on the door. It's the third time it knocked on the door and it broke, barely. Closed on a high. So I'm expecting this to break higher. And I'm going to go ahead and do a 480 calendar trade. And so I'm going to sell the 480 out to Friday and bring in another nice credit. I bet it pays real well too. That's, yeah, look at that. It's going to pay 475. Are you kidding me? That's too good to pass up. And yeah, I like this idea of a May calendar spread. I'm getting into it for less than $2,000. So I'm investing less than the profits we made on the last one. I like that. And it gives me a cash flow machine that I can play until May. Man, that's a good deal. I'm happy with that. That way I'm not giving up all my profits on the last one. So I'm tucking some away and giving myself long-term play on gold. That's just good trading right there. That's pro level trading. All right, SMH, the short expired worthless, and now I'm just holding a long on semiconductor. Not a bad position to be in. And so you can see that SMH is the semiconductor ETF, and that's been holding up beautifully. In fact, I think I'm going to I could just sell against it now since we're kind of near resistance. We're hanging around 470, 415, and I could sell the 420 near this high right here. This high is 420.6. Maybe I'll just do that. I'll sell the 420. This thing could pop. This thing could pop and break to a new high. If it does, I'll just roll the short. So let's go ahead and just sell the 420. Maybe I should go 421 on SMH just for cash flow. Keep the trade going. You got to keep your good trades going. So I could sell the 422. Wow, are you kidding me? Look at what it's paying. And what am I missing? It's too good to be true. That goes out to Friday. The 422 is paying me 550. Well, I might as well do the 425 then, give it a little bit more room to run. That's a lot of money. I'm going to make $460 on the short, and then away we go. All right. So then I'm going to go ahead and go back to the. I lost my. Oh no, that's fine. This one I'm just selling. Okay. So let's go ahead and do that and confirm and send. And send. Okay.
This conference will now be recorded.
Okay, so that's that. And then the last one is XLB. So let's just see how XLB is looking. And I'll tell you some things I'm thinking about putting on. And I may put on, but see how XLV, it's okay as a cash flow trade. It's holding up. It's hanging in there. It's technically a boing boing signal. So I think I might just leave it on here and see. Let me just see where I'm short. I am short the out to March 6th, the 161. I think I'll just leave that alone. I'll leave the XLV alone. It's doing fine. It's not great, but the performance of the XLV is better than shown here because I've been cash flowing regularly. So that's going to make that trade a little bit better. All right, just a couple that I'm thinking about doing. I probably won't actually put them on until tomorrow morning or Tuesday when we have our trading lab. So UGL, or maybe I'll do an early trading lab. This is just gold. This is another way to play gold. If you want to play gold with a cheaper stock, instead of a $400 stock, if you're on a budget, you got the exact same pattern by trading the ProShares Ultra Gold. So this will have a little more wiggle to it, but also be a cheaper stock if you prefer. But the one I was really thinking about is Brazil. Getting along Brazil here. So look at this. It's really near a high here and very close to potential breakout. So I'm looking at that. And here's about 2 or 3 other things I'm thinking about. Here is AES Corp. Okay, that's in a nice high base. Nice cheaper stock that you could almost do a covered call on this one, maybe. You probably could just do a covered call on this one. Don't do a lot of covered calls because I'm used to using leverage, but it's a cheap enough stock where you could. I really like this pullback, this bull pullback here on UPS. So there could be an opportunity to get long there. I'm going to circle that one. I'll probably put that on Monday. Budweiser's not looking too bad either. I think they're kind of past. This isn't a boing boing. Yeah, I'm going to take this boing boing right now. Just take this boing boing now, and then that's it. Okay, so let's go out 30 days or more. I'm going to go out to April. I'm going to go out to April monthly. I know it's more than 30 days, but March just feels too tight to me. So I'm go out 30 days, buy a call 35 to 45 delta. I like round numbers, so maybe the 40, maybe the 430. That's a little pricey though. No, this isn't Budweiser. I mean, there's something wrong there. Bud. Let's go to Budweiser, and here we go. So 80 strike is a 46 delta. I'm going to do the 80 strike, and I'm going to do two of these, maybe three. Let's do two, and put that on at the mid. Okay, Berman send and send. All right, that's all I got on behalf of Wealth Foundations at Northwest. It's been my pleasure to have been your coach today. Good luck, good trading, everybody. Take care. Bye-bye.